Hello and welcome to Personal Finance 101. My name is Franz. Our subject this afternoon is about budget, creating a budget, the reason for you to have a budget. If you like what you hear, please do us a favor, subscribe to the channel, and also give us a thumbs up. It's very important for us. What is a budget? Anybody that's working, meaning they have an income, and spending, because in order for you to live you have expenses, so you're going to spend money. The difference between an income and expenses is the savings. So in order for you to have a budget, so you know where your money is going, it's good for you to prepare a budget. And today we're here to explain to you the different things about a budget. The first step in creating a budget is to identify the amount of money you have coming in. If you're a W-2 employee and your employer already deduct all your taxes for you, your expenses, which are Social Security taxes, Medicare, Medicaid, 401k, if you have one at work, or any other deductions. It varies, depends on the situation of the person, because they have you file a form called a W-4 where you got to put your deductions. And depends on the amount of deductions you choose to put, 0, 1, 2, 3, or 4 or more, the amount of money they deduct from your paycheck will be different. So today we're going to explain that to you about your income if you're a W-2 employee. If you're a 1099 employee, they pay you all your money and you are the one that have to create your own deduction and do your own taxes. It's up to you, but I'm not a CPA, so if you need more details about what to do if you're a 1099 employee, we suggest that you talk to your CPA. Other incomes can be a side job. If you have a talent or a hobby, you do side teaching, you do tutoring, you give classes of gymnastics or yoga, or you're a personal trainer, or you drive Uber, you do Uber Eats, or you drive Lyft. Any side job is also an income, and you have to consider that income. Most of the side jobs are not consistent. In that case, you need to choose a amount of time. Let's say you take 6 months and then you divide it, or you take an entire year to follow it and you divide it by 12 for you to have an average of the month. Certain months are higher than others. For example, December or November during Thanksgiving may be a busy time when people travel. At that time, if you're a driver, you're going to have more job to do. If you're a pizza delivery guy, the day of the Super Bowl, you're going to have more drive that day because people stay home and they order a lot of pizzas. So all these, you got to consider them when you do your budget in order for you to identify your income. So I'm going to show you a picture of the budget so we can go through it, and I will explain the different part of the budget and what they are. Okay, so I basically show you a table where you can see the budget and the different section of the budget. So on that section here, you see you have the income. We put it $3,500. You can change it. You can put it $3,000, for example. You can put it $2,000, whatever your amount is, and right there you can see the $3,000 come up. Expenses is about $2,100. Those are all your expenses, and the balance is $900. In this table, we can play with the different items. These items, as you can see them, for example, your car payment is $300 a month, let's say. Your rent is $1,000 a month, as you can see. Utilities. So you put all your expenses one by one. You may have more. That's why then at the bottom we put more. If you go, you see, if you want to separate them between your home payment, you got your mortgage or your rent, your home or rental insurance, electricity, gas or oil, water, sewer or trash, your phone bill, cable, satellite, internet, furnishing and appliances, if you're leasing anything, lawn and garden, maintenance and improvement, and other. And then you got your car payment, your car insurance. If you got different credit cards, as you can see here, if you have credit card Visa 1, Visa 2, MasterCard, Discover, American Express, any type of payment that you have, you put it here in order for you to determine your savings. Income minus expenses, that gives you your savings. So now, why do you need a saving? Well, as we mentioned in this program, our goal is for you to be able to save money in order for you to accomplish better tomorrow, so you can have a better future. In order for you to have a better future, you need to save money. One thing that's very, very important, Depends on which phase you are in your life. You can save more or less. If you are young, that's the time where you got to push hard and put all your money after expenses. Live below your means. If you have an income of $5,000, don't spend more than $4,000. The idea, or what they call a rule of thumb, is you have to be able to save 10% of your gross income. Let's say, for example, you make $40,000 a year, you have to be able to save $4,000 a year. Now remember, your gross income is not your net income. There's a difference. Your gross income is the amount of money that they say they're going to pay you, which is $20 an hour or $25 an hour. And that, if you do 40 hours a week, $20 an hour times 40, that will give you $800 a week times 52 weeks. And that would give you the amount of money you make per year. That money is not your net income, because after they remove all the taxes, you're going to have a net income. The money we're talking about for savings has got to be 10% of your gross income. 10% of your gross. So if you make $40,000, I'm sorry guys, a lot of you are going to say, oh, how am I going to be able to save $4,000? You got to find a way to do it, because this is the best way in order for you to achieve your goals. You got to be able to save $4,000. In this scenario here, right, the income is $3,000. They have to be able to save $300 every month. So in this scenario, I show that this is $900, but you and I knows this is not really the exact figure. So if we put everything that we left blank, for example, the credit card and other things about vacation, about kids' daycare, about transportation, if the car needs to change oil, or you got a problem in tires, or emergency, or other situation that may come up in your life, and we know they will come up, you got to save, put money on the side for that. The 10% we're talking about is savings for you, savings in you. And one of the things that they like to say is you got to pay yourself first. So that means whenever you get paid, the $300, you got to pay yourself first. So here we need to create a line, and you put your name there. Instead of credit card, MasterCard 4, we put your name. And that way you can be sure, and we put here $300. And then you're going to see the expense going to change right there to $2,400. So you create yourself as an obligation for you to be part of the budget. So that way you always pay yourself first. It's very important for you to pay yourself first. When you do that, so that means whatever's left. So let's say you pay yourself first $300. Then you pay your rent. Then you pay your car payment. Then you pay your insurance. Then you pay your utilities, which is electricity, water, cable, your phone bill, and all that. And then there's money left, groceries. Whatever's left is for you to enjoy it. It's for you to go to the movies, for you to go to the dinner out, or for you to put money on the side to go on vacation, or for you to do whatever you want. Because there are certain things that are not a priority. You got to put yourself as a priority, as what I call a fixed expense. And I'm going to talk about that right now, the different expenses that exist when you do a budget. The first part was income. The second part we just covered is expenses in general. The expenses are divided in two categories: the fixed expenses and the flexible expenses. The fixed expenses are rent, for example, that's $1,000 every month for about 12 months, because you sign a lease, which is an agreement between you, the tenant, and the landlord. And that amount is fixed for 12 months for about, let's say, $1,000 or $1,200. Or if you have a mortgage, your mortgage is fixed for a certain amount of time, 30 years or 20 years, whatever the amount of mortgage is. Fixed cost, fixed expenses. Those are the fixed expenses. Then you got flexible expenses. Flexible expenses are expenses that fluctuate and that you have control over. For example, going to the movies is an expense, but it's flexible. You don't have to go to the movie every week if you cannot afford it. Remember, pay yourself first. My name is Franz, and you are listening to Personal Finance 101. Today, we covered with you creating a budget, the reason of the budget, the importance of a budget. If you like what you hear, please do us a favor, subscribe to the channel, and also give us a thumbs up. It's very important for us. My name is Franz. Please subscribe to the channel, share the information. If you like what you hear, share it in your network, share it with your contacts. I'm not an expert. My job is to share information with you, things that I learned in my life that helped me in my life for me to become who I am today. And it's with all my heart that I'm here sharing that information with you. And hopefully you will learn from it. Like the video, comment, share it, tell it to your friends, and please start saving today. Don't wait for tomorrow to start saving. So somebody asked me the other day, when should I start saving? I told them you should have started yesterday. Listen guys, the earlier you start, the better it is. Okay? Earlier you start saving, the better it is. So sit down, use your calculator, get your bank statement, your credit card statement, look at where your money goes. You need to be in control of your money. You need to know and track all your expenses. It is very, very important to keep track of your expenses and specifically to categorize your spending or your expenses so you know where you can make adjustments. And also that will allow you to know exactly where your money is going. Doing so will help you identify what are you spending and where are you spending your most money. So that way it will be definitely easier for you to cut back. Do that simple exercise and you will be amazed and sometimes surprised to see how much money you have spent in such or such category. For example, if you order stuff in Amazon every month but you don't realize it, or you spent money eating out but you never know how much money you spent, when you look at your bank statement at the end of the month, or you're looking at your credit card statement at the end of the month, you realize, oh boy, I'm eating $20 a day for 23 days of work. That's a lot of money that I'm spending every month on eating out. If I buy my own food from a supermarket myself and cook at home, maybe I can save money. Okay? So in order for you to cut back, you got to know where to cut and how to cut. In order for you to know that, you have to analyze your expenses. So fixed expenses, remember there are regular monthly bills such as rent, mortgage, utilities, car payment. Those are fixed. And it's unlikely and hard to cut on fixed expenses because those are necessary expenses. Then you got the variables or flexible expenses. Those change from month to month and those are easier to play with. There are groceries, entertainment, credit cards, and those are stuff or bills or expenses that you have control over and you can be easier to play with and reduce. Sacrifice a little bit, it will pay off better tomorrow. Remember, you got to live below your means. You got to save 10% of your income every year, of your gross income. If you make $40,000, you got to save $4,000. If you make $70,000, you got to save $7,000. You got to be strict. You got to be tough to yourself. It's not an easy game, I know, but you got to be tough to yourself. Set goals for yourself, specific goals with objectives and a time frame. And those goals, in order for you to realize them, you will use your budget to help you save money to realize those goals. For example, when you go and you want to lose weight, they usually tell you to be specific. I want to lose 10 pounds in 2 weeks. The amount you want to lose and the time frame. So same, if you want to buy a car and you want, okay, you're going to say to yourself, I want to buy a car in 9 months or in 12 months. In order to do that, I need $5,000. For me to get $5,000, I need to save $400 a month times 12 months to give me the $5,000 about. Thank you for being with us. Thank you to be part of the Personal Finance 101 journey. My name is Franz, and I'm here to share my experience with you. Thank you so much, and see you next time.